1. Balance sheet. Cash purchase of equipment. The cash outflow for the purchase of equipment will decrease cash and increase the value of property, plant, and equipment on the balance sheet. Issuance of bonds payable. The issuance of bonds payable will increase cash and increase the liability of the company on the balance sheet. Payment of dividends. The payment of dividends will decrease cash and decrease retained earnings on the balance sheet. Depreciation of equipment. Depreciation is a non-cash expense that decreases the value of property, plant, and equipment on the balance sheet. 2. Income statement. Sale of goods or services. The revenue from the sale of goods or services will increase revenue and increase net income on the income statement. Cost of goods sold. The cost of goods sold will decrease gross profit and net income on the income statement. Interest income. Interest income will increase other income and increase net income on the income statement. Depreciation expense. Depreciation expense will decrease operating income and net income on the income statement. 3. Statement of changes in equity. Issuance of common stock. The issuance of common stock will increase share capital and increase total equity on the statement of changes in equity. Declaration of dividends. The declaration of dividends will decrease retained earnings and decrease total equity on the statement of changes in equity. Repurchase of common stock. The repurchase of common stock will decrease share capital and decrease total equity on the statement of changes in equity. 4. Statement of cash flows. Cash sales. Cash sales will increase cash flows from operating activities on the statement of cash flows. Purchase of equipment. The purchase of equipment will decrease cash flows from operating activities and increase cash flows from investing activities on the statement of cash flows. Issuance of bonds payable. The issuance of bonds payable will increase cash flows from financing activities on the statement of cash flows. Payment of dividends. The payment of dividends will decrease cash flows from financing activities on the statement of cash flows.